Okay, we're good. Okay, so I want to make sure, and let's get this all clear, and I wanted to get it recorded so we can review it. But this is in relation to the question that was asked about Microsoft, and obviously it applies to any put spread or any spread that is in the money and what happens at expiration. Okay, so let's put on our risk manager. We have on this iron condor. Hang on a second. Okay, so we have on this iron condor, and we have an expiring position. So essentially what we have is we are long a put spread, or excuse me, we are short a put spread and short a call spread. So what are we concerned with? We're risk managers right now. You look exactly, Rick. The call side we don't care about. With Microsoft trading down at 51.5, we don't have to worry about the 57.58 call spread that we're short, at least for right now. Okay, so now we're worried, or not worried, we are addressing this. Looks like we're getting some Alta. All right, so we have this. So this is the position that we have on. So let's put this on. We're short this. And we're long this. Okay, and this is what this looks like. Not that it matters, but we're getting rid of all these guys here. This is what this position looks like. All right, the only way we're going to make money on this is if we come back up above our short strikes. Or above our short strikes. So, at expiration, let's fast forward to the end of the day. And this is what we have. Okay, we have a short. We have a short put here. We have a long put here. Okay, so what's going to happen? Let's just say we go out exactly at 51.5. What's going to happen to our short 54.5 puts? Okay, so exactly. What's going to happen to the 54.5 put? It's going to be assigned to us because whoever's long this is going to exercise their right to sell Microsoft at 54.5 when it's trading 51.5. Conversely, what do we do with our long 53.5 put? Exactly. We will exercise our right? With Microsoft trading 51.5, we are going to exercise our right to sell Microsoft at 53.5. So, between getting assigned at 54.5 and exercising at 53.5, we're going to lose $1. We took in 60 cents to put this whole thing on. We're going to lose 40 cents. Okay. So, now the question is, well, why don't we just buy in our 54.5 put? And then we can. That only works. That only works if Microsoft continues to go down, right? Because this is what the position looks like now. Okay, this is what the position looks like now. And then if we say, you know what, let's buy this thing in. Now this is what it looks like. And so now we can start making money if it continues to go down. But really only continues to go down because really all we've done is we've gotten short Microsoft underlying. This thing, for all intents and purposes, the delta is showing a 98 delta. It's a 100 delta. There it goes, 100 delta. It's going to act just like stock. But Monica made a good point that she gets charged for an assignment. So there is, if it is cheaper for you, and you're going to have to call your broker and see what, I'm sorry, I put this in the wrong place. You're going to have to see what works best for you. It may make sense from a cost standpoint to buy this thing back at parity. Because if you get charged less in brokerage to buy back your short put spread than you do in getting assigned, that's a question. That's one thing that you want to ask your broker. Okay, so did that clarify? I know that there was a lot of back and forth, and I just want to make sure that everybody is clear on what is potentially happening, or if there's any other nuance that is confusing. Well, Steve, that's why we're here. You have questions, ask him. Steve says he still has questions. And Steve, you get to be first in line because you're the one who posed the question to begin with. Thank you for that. And I didn't mean to intimate that Steve is the only one that can ask questions, but he's first in line. Just to let you guys know, what we based the Ulta on was this continued rejection, and then it T-boned here. Couldn't get above it, couldn't get above it, couldn't get there, couldn't get above it. Now it's triggering below this. We're looking for my initial, excuse me. I like targeting this gap here, the top of this gap. That's the place that I'm going. You can see that is also coincident with when volume starts to kick in. So we get much below here. You see where this volume is. This is pretty darn simple. We get below here. There's nothing in, there's air in between here and basically here. Okay, so Steve, so if you buy back the short, and sorry for bouncing back, but I wanted to get the rationalization of Ulta out to you. So if you buy back the short, do you have to sell the long before expiration? It will. I mean, it will get assigned. Yeah, it won't get assigned. You will automatically exercise it. You again check with your broker, but with every brokerage firm that I've ever dealt with, if an option is in the money by 1 penny or more, they're going to automatically exercise it unless you tell them not to. Now, if it settles exactly at the money, they don't automatically. That's been my experience. I would again confirm that with your broker, but that's what's going to happen. So then you are actually, if you don't do anything, I mean, if you don't tell your broker to act or not act, you are going to get, on Monday, you're going to be short 100 shares of Microsoft at a price of 53.5, which is great if Microsoft continues to go down, but if something happens over the weekend and suddenly you are then, and it goes back up to 57, these have already expired, so that's no big deal. Well, now you're just short Microsoft underlying from 53.5. So you have to do one of two things. You can either sell out of, and you're saying if you had bought back this short, you would either have to sell out of your put, or you would have to buy stock in equal amounts to whatever you're short in the put. Because then if you buy stock, then that's going to wash with your automatic exercise, Or if you just sell out your put, then obviously selling out a put that you're long makes you flat. Certainly, you wouldn't have a position then if you closed out the long put. If you bought this back and then during the day you were long this put, and by the end of the day you sold this put, then you'd have no position on the put side. We stay down here, this would go away, and then obviously these would go away as long as we stay below 57 by the end of the day today. But realize what you're doing is basically day trading Microsoft stock if you buy this back. All right, any other questions on that? No problem, Rick. This is important to identify what is confusing to us, right? That helps Scott and I say, okay, this is confusing, and it's one of these things where it's like, well, yeah, of course 2 + 2 = 4. Well, if nobody's ever seen a number before, what does 2 + 2 mean to them? It doesn't mean anything. So what's simple and obvious to Scott and myself, we have the advantage of doing this for 20 years or more. So Rick, you said that pin risk gets you every time. Do you not understand pin risk? Because we can talk about that too. Oh, you get it. Okay. Does anybody else not under? We talked about pin risk last week. Does anybody else not understand what pin risk is? All right, Paul. Okay, so what pin risk is, and pin risk only is risk for the person who is short, okay? Because if you're long, you have the right of self-determination. I can exercise or not exercise whatever I want for whatever reason. Okay, so let's take the example, and let's go, I'm going to clear out these sims. Okay, and let's pretend that let's pretend that Microsoft, we are right at expiration. We are, 3 o'clock Friday today, and let's say that we went to 51.5, and we're trading exactly 51.5, and I'm short the 51.5 put, or the 51.5 call. So now, and we go out exactly at 51.5. What do? Are you going to get assigned or not? And if you have multiple contracts on, how do you know? That's the thing, Paul, is that you don't know. Somebody might exercise that put for whatever reason. I don't have the right of determination, and I don't have the right to know until it's too late to know. You're going to find out on Saturday how many you got. So let's take the example that we have 10 of these things. Okay, so either I sold the right to get short this. So I am, if I get assigned on all 10 of this, I am long from 51.5. But how do I know how many that, and we expired exactly, the settlement price was exactly 51.5. How do I know how many, if any, I'm going to get? You don't. That's the problem. Because if you knew that, okay, I'm going to get assigned on 5 and I'm not going to get assigned on 5, well, all you have to do is sell 500 shares of stock and you're flat. The thing is, you won't find out until Saturday, which means you can't act until Monday on whatever you got assigned on. So that's where you don't know. I could get assigned on 1. I could get assigned on 10. Because we don't know, nobody comes in and says, hey, Mike, I know you have 10 of these. You're going to get exercised. You're going to get assigned on 7 of them. Okay, then I can act. I know I don't have to worry about 3 of them, and I can sell out stock. Yeah, I mean, you might be able to find out. I mean, it depends on your clearinghouse again, but a lot of people won't find out, and I would imagine most don't find out until the actual settlement occurs on Saturday. So Sunday night for pre-market overnight trading is the first time you're going to be able to act. So if you are long a bunch of Microsoft stock here and something happens and it continues down and you open up at 48, you just took, $3.50 a heat on that. So that's why we close out these things. We won't get ourselves into a pin risk situation. But that's what pin risk is. And even though we don't put ourselves in that position, it's important to know what it is. No, there's no similar risk, Rick, because why? You own the right to make that decision. If I'm just long the, what did you use here? The 53 half put, okay? And we close exactly down at 51 half, and I have 10 of these. Not 110, just 10. If I have 10 of these, what am I going to do? All right, Monica, we'll see you later. I'm going to automatically exercise my right to get short here, and I'm going to go and buy stock against this. I'm going to go buy 1,000 shares of stock down at 51 half. Sold at 53 half, bought at 51 half. Now, yes, you do have that risk if you only exercise your put and don't do anything with the underlying. All you are is short from 53 half. And like what Rick said, that what happens on Monday if Microsoft opens at 55, I'm short at 53 half. I'm $1.50 against me on 1,000 shares of underlying. But you would well, maybe it's not obviously, you would exercise your right to be short here, and you would buy back the underlying that you're short. Unless, yes, if you close the if you close the trade today, I mean, you can go out and you can buy that put spread back in for $1, or you could just let yourself be exercised, be assigned and automatically exercised, and it's just a wash. But that's a 40-cent loss, worst case. Cannot lose more than 40 cents unless you start legging in and out of things, which is what we're talking about now. All right. So I am glad we recorded this. Anybody else have any questions before I turn off the recorder? If the goal of the long put is to have it end up in the money, is it better to close out the put just prior to expiration or let it expire and incur the cost of exercise by your broker? Well, I guess that is a case-by-case basis, and it depends on how much you get charged for commissions versus how much you get charged to exercise something. But if it were me, since we're not just taking open long or open short positions in the underlying, I wouldn't leave anything like that, certainly over a weekend and not even overnight. I'm not holding equity positions. I'm an options trader. So Monica had to go. If Monica has Microsoft, what will happen to her at the end of the day? What's going to happen to everybody? We are going to be assigned our 54 half puts. We are going to exercise our 53 half puts. We are going to lose $1 in that transaction, but we've already taken in 60 cents for doing the trade yesterday, and so we would lose 40 cents. We're not going to put out an exit. We're going to let it just assign and exercise automatically. If you want to close out the put side of this thing and pay parity for it because it makes sense for you commission-wise, you certainly can. But we're not going to do that. The max loss is going to be and Steve just asked, we got in for a net credit of 60, but is the max loss equal to the short strike minus the net credit on either side of the condor? No, the max loss, remember, we can, at expiration, and that's where we basically are right now, we only have to concern ourselves with either the put spread or the call spread. At no point can the put spread and the call spread be in the money. Everybody understand that? We can't be below 540 and above 57 at any point. Okay? So the most we can, so now we're focused on the put spread. Most we can lose on the put spread, just on the options, is the width of the spread, which is $1 in this case. So we can lose $1 on the options. But no matter what, we get to keep our credit of 60 cents. But then we have to settle up at the end of the day. So $1 that we lost, less the 60 cents that we win, we lose 40 cents. And Roger just said he found out that E-Trade charges more for automatic assignment and exercise than to close a position, saves about $17 in commissions. So good. That's good that you called them, and that's not surprising. We will be assigned, Roger, but we will also exercise our right. We won't have any underlying stock position. You got it, Rick. No problem. Because but you only got 33 on the put side, but you still get to keep your call side. Your call side's going out worthless. So that's the upside to doing an iron condor is that you're collecting premium on the put spread and the call spread. Of course, you risk. Then you're just saying, well, we're not only going to just go up or just go down, but we're not going to go further in either direction. In this case, we were certainly wrong. It doesn't matter. It doesn't matter what you got on the put side. If you got 0 on the put side and 60 on the call side, you still get to keep 60, right? So that's the thing. Correct, Jim. If we do nothing, there's no way we will end up with Microsoft stock. And if there is even a remote possibility that we're going to take, like if we start rallying up towards our put spread, we'll deal with it then. But right now, that's not a risk. Yeah, Scott says we have other fish to fry, which is true. All right, so I'm turning off the recorder on this one.